Ken Bernanke quote from a speech today that throws some cold water on this. I don't know whether that was his intent or not, but Mr. Bernanke is very concerned that the credit damage is going to be continuing and ongoing. There's a second issue with Paul Krugman, the New York Times columnist, and I'm being extremely fair and balanced on this point. Krugman thinks that the risk is there's a double-dip recession. There's his column, Green Shoots and Glimmers. But at the end of the thing, he reminds everybody that we did have a pop coming out of the Depression in 29 to 33, and that by, what, 36, 37, we went down again into another recession. So let me go to Don Luskin. Don, do you think that America is turning the corner? Do you think this is unambiguously good news?
Oh, gosh. No, it's of course not unambiguously good news. The good news about it is just 3 or 4 months ago, everybody thought, and there was just no argument against the proposition, that we were in a vicious cycle that was going to take the world economy right down to zero. There didn't seem to be any way out of the vicious cycle of reduced consumer spending, reduced employment, falling real estate prices, increasing defaults, and so on and so on. And now, here we are, actually looking like we're kind of stabilizing. You got to stabilize before you can turn around and turn up, so at least we're stabilizing. And the bears who said we were going straight to zero, they're going to at least have to admit that that was wrong. Now, it's true. We had some great bear market rallies during the Depression. We had 3 years of back-to-back double-digit positive real GDP growth in the Great Depression. And then, as Krugman points out, we had that horrible depression within the Depression in 37 and 38. And what Krugman doesn't say in that column is it was the New Deal policies of FDR, which look very much like the New Deal policies of Barack Obama, that caused that depression within the Depression.
Amen.
And so I worry, have we turned the corner only to get near another corner? Fine, we're stabilizing. That's a corner. But the other corner we've turned is the corner on the road to serfdom, because we're putting in place more government intervention in the economy, higher taxes, and we're going to pay the price for that.
With Don Luskin, in view of the rapid growth in money supply, the expansion of the Fed's balance sheet pouring liquidity, the normalized upward sloping yield curve, which is so great for banks, the improvement in all of the credit market indicators, I mean, every one. In fact, you know what I noticed today? Junk bonds had a big rally. Investment grade bonds had a big rally. Short-term rates are at rock bottom. Why not deal with this a day at a time, a week at a time? And to use Jerry's point, let's look right in front of us before we go down the road and conjure up all the worst-case scenarios. Why can't we say that America is still fundamentally a free market economy? And guys like me believe in our democracy, believe in progress, believe in American economic progress, even though sometimes I'm highly disappointed in policies in Washington. Why not play it that way in a shorter-term sense, Don?
That's fine. That's a great way to play it. That's exactly what I've been saying every week on this show. The problem is, it's just kind of sad that you have to become a player instead of being an investor. Wouldn't it be nice if all that stuff we've been telling our 401k plan participants for the last 25 years about buy them and hold them and forget them and stocks so long term and the gospel of equities, wouldn't it be nice if that turned out to have actually been true? But no, all of a sudden, we're talking the language of 12-step programs where we have to go through life one step at a time, one day at a time, and do all this, what amounts to day trader nation.
Well, I like
that's great. I understand.
If the Federal Reserve and the Treasury...
We all do. I never exhaled.
Don, if the Federal Reserve and Treasury Department hadn't gone all in, what would the outcome have been?
Who knows?
Well,
but
wait, excuse me. You're preaching to the choir. I don't expect you to have memorized everything I've ever said in public, but I absolutely agree with that. I don't think they shouldn't have done that. That's not the problem. I just don't want to see top marginal income tax rates.
Peter Schiff, real fast. And I must say, besides my fundamental belief in American progress and prosperity and our democracy, if something goes wrong, voters vote out the bad guys in Washington. What about American entrepreneurship? What about American initiative? What about American economic freedom? Sometimes it suffers a little, sometimes it advances a little, but on the whole, Don, it has been a fabulous story. Am I to believe, in the depths of a bad downturn and a rough bear market, that all of that entrepreneurship and good common sense of American people working in business every day and now investing is going to go away? Do I really have to believe that?
No. I don't think anybody is saying that you should believe that. America has been a beacon to the world for over 200 years, precisely for all those reasons. But on the other hand, within the time frame that investors have to make decisions, years, decades, you go through periods when that freedom is given greater play and when it's given less play. And when it's given greater play, you have very good, prosperous, high growth, low inflation decades. And when it's given less play, you have lower growth, higher inflation, wealth-destroying decades. The 60s and the 70s were in some ways very good, in some ways very bad. The 80s and the 90s were fantastic. Now, we had all our freedoms in all 4 of those decades, but it was better in the 80s and the 90s than it was in the 60s and 70s. I think all I'm saying is that our next 10 years is probably more like the 70s than the 80s. And the 70s is okay, better than being on a gulag, but I'd rather have the 80s back.
Well,